So, hey, this is going to be the video about the fourth chapter of the book, and it's going to be about basic concepts of trend. And what is important to know is these trends. This is a really important chapter because the rest of the book is actually based off of this chapter. But then it takes just some elements of the trend and refines it more into more detailed stuff or explains it in more clearly, stuff like that. So this chapter is really important, and there was a lot of information in the chapter, so it's probably going to be quite a long video. So yeah, be prepared. So first of all, the first important thing which I noticed in the book, sort of, was that the trend consists of three, uh, what do you call it? Three conditions, sort of, which is going to be. You can see the major trend is up, right? Then you sort of have a correction phase, or the short trend is down, and you can also have an intermediate trend down, and there's a whole lot of stuff which can happen, but it's just an overall trend and shorter versions in the trend. Probably already knew this, but it's still important to know because, well, you might need to handle or trade in these kind of situations, right? Well, let's move over to the second example, and this is basically going to be about resistance lines turning into support lines, or support lines actually turning into resistance lines. You'll see that back like a whole lot of times. I think I even discussed it in the previous, or like in my trend lines video or patterns video. I'm not going to go over it, but basically there's a lot of situations where the support line or the resistance line, as you can see in the picture, turns into a support line. And yeah, there's not much to say about it. It just happens. Let's go over to this one, and this one is actually kind of interesting because this is a way of how you could deal with actually like an outlier of a trend, because there was a lot of volume, and as you can see, the candle did close right here. It opened right here, and it went all the way down. Uh, but there was just a lot of volume on this day, and the way to go about it is actually draw a dotted line and not really have it as a trend line, but it's yeah, you could it's not yet to be determined if this is the real line, but just for now, keep your head on the sort of the main line. So this is just it could be like even a second resistance or a support level. Once the price goes down, it's all the way back here. Could even mean like a support level. So it's interesting to take a note of this one and how to deal with a lot of volume in a single traded day or hour or anything like that. Let's go to the next one. And this one is interesting because these ones are about fan lines. And first of all, I wasn't really sure where I could see this. And I actually tried applying this to some graphs. And I don't know if it's pure luck or if you can actually see it. But basically, I'll show you in the Bitcoin here. So I just drew a couple of fan lines starting at the point of the top, which is going to be 69,000. And as you can see, if you didn't know these were the top of the markets, right? Then you have like a second top right here. I wasn't sure about this one because you could say this is the next peak, so there isn't actually a third peak. But I guess this one, because I drew it over the lines of this support level here and this support level here, and having resistance here, sort of. So I'm not sure if this is the correct way, but I'm guessing. And as you can see, the third line is actually maybe turned into a support line right here, but it did not have any effort of moving through it. I guess here is a resistance. So I guess that was kind of cool. I'm not sure if it is meant to be this way, but I guess it's meant to be. I'm still not sure, but yeah, that's pretty cool. So now that we've had this one, we can move over to the next one, which is gonna be about, let me see. Yeah, the accelerating trend lines. So basically what this means is you can have a trend line, and I think a healthy trend line was something like 45 degrees or 20, but I'm not sure, but somewhere between those. But yeah, this is a healthy trend line, and it couldn't even speed up. But the thing is, with trends that are speeding up a whole lot, most of the time it's not really healthy. And one of my experience with this one is on a coin called Waves. And when I was looking at it, it was making massive new highs. It was making massive new highs. So this is quite a, how do you call it? A healthy downtrend, right? And here it is pushing and pushing and pushing. As you can see, it is way too steep and it's not sustainable. And as you can see, it was indeed not sustainable and went down all the way. So I guess you could call this a healthy trend line because there's yeah, it's a healthy way. It's I think it's I'm not sure what the numbers are, but between 20 and 40, I believe, something like that. You can see it had a massive acceleration in the trend. It's not sustainable. It comes down, and the same thing happens here. This is really sped up, but still not sustainable. It comes down. So I guess this happens quite a lot of the times, and even with normal stocks, you can actually see a lot of stuff which wasn't sustainable hitting back immediately. So I guess stuff like the S&P 500 is one of the healthiest stuffs or things, because when there is going to be the moving average is always going to be an uptrend, right? But it's a more economy sort of. So yeah, that's pretty cool to see. And yeah, let's go to the next one. So the next one is gonna be about retracement levels. This one was actually kind of interesting because I've always seen people sort of use Fibonacci retracement, and I was trying them out, and I was like, okay, I guess they are retracement levels, but what still? What are they based on? And I even watched a tutorial on Fibonacci retracements, and when I was looking at it, those was like, yeah, okay, this is purely because self-made prophecy. Many people use it, and that's why it works. And I'm still actually not sure what to make of it. So I'm just gonna try this out. But basically, most of the time you will have a retracement back of 50% of the rally. So as you can see here, this was a rally, and it's gonna be between 33 and 66%, so 1/3 and 2/3. It's gonna retrace somewhat around there. If it retraces further, well, then it's probably gonna be like a trend reversal because it went down more than the previous low, previous troughs, something like that. Right, so I'm just gonna try this out. Actually, I'm just gonna select. Yeah, I'm not sure if cryptos are good for this one. I'm just gonna try it out. So what I'll basically do is I'll take the low. I'm not sure if this works because this had a massive pump, but I'll try it anyway. So I'll take the low of this one and move it all the way up to the top and see 50% retracement. Not really much happening, and it could just as well be a coincidence that it got stuck at 7.8 and here on 7.8 and something going on here, but still not really valid, right? So I'm not sure if crypto are actually like a good way of using this, and I guess it's more based on normal stocks. But this seems more healthy, so let me have a look. And again, I can see some price action in actually really great touching down on these angles right here, but I'm still not sure if this is just a coincidence or it actually does something, because that's the thing that was kind of hard for me to really see. I have tried it a couple of times, right? I have tried, but there's just a lot of times where I'm like, yeah, I'm not even sure if this is just a coincidence or if it actually is like a self-made prophecy or anything, because it's hard. And I guess, yeah, I'm still not sure what to make of it, because sometimes it touches, but it's, I'm not really sure where it came from. I really understand retracement, and I think a really cool reason for doing one of those things is actually having like a retracement back, which was like, let's say this is an uptrend, or like a rally up like this, then you will actually have half of this trend as like a retracement pattern. And so we'll go like this way, or even go all the way to the half of this thing like that. I think that is a pretty cool deal, because I'll use like an arrow. As you can right here, it's going to be one price action, and I'm actually going to make another copy of that arrow into this price action. So I'm not sure what to take, but I guess I'll just take the top. And if I move them, these things are actually like almost the same size. I'm not sure how to really rotate these things, so I guess I'll just do it on my half like that. So this is definitely more than a 2/3 retracement. Um, but yeah, I think it sometimes work. So this one, for example, is gonna probably be quite accurate, but mainly because it's soft picked, probably. Because I'm looking at stuff, because it's not gonna be there every time. I'm actually try to rotate this one like that. Yeah. This is gonna be about 1/3, like 40%. And maybe it happens more often, like a price retracement here, but you could see it from this way. But it's really from like where you look at things, because you can look at a 50-minute chart and say, I'll just pick a random moment here. Let's pick this one. So it had a really good price retracement, really good rally up, but here it was the same length, sort of, going sideways. And I think it's supposed to be like 1/3 and 2/3 between those, and it's not really happening here. So yeah, it's I'm not sure really where to draw a line, because what you can see here is that a really good up rally, right? And I'm not sure if you have to draw it at this point, or you're saying, yeah, the sideways movement went all the way to here, or even it went all the way up to here. So I think it's a good measurement if you take it up to the lowest point after that, because then it does look like it's about 1/3 of the price action, right? Sort of. So that was kind of my theory about this. Still not really sure if that's the correct way, but yeah, it did seem pretty cool to me. Where are my figures? Where's my stuff? Hey. Oh, I'm at 15 minutes. Sorry. There they are. Okay. Where's the big picture? Oh, I guess I don't need it. All right. The next one is gonna be about speed lines, and I think I went over it quite right. Is this the one? No, this is not a rudder retracement. But these are speed lines. Yeah, sort of similar to the dotted line which I drew earlier. Um, well, actually not. You'll take the whole stuff. Actually, I'm gonna try this. Recreate this. So just for the sake of it, I'll do it in the S&P 500 stock. So basically, what I'll do is I'll draw a triangle from the previous low to the previous high, and I'm not sure if it is meant on like the daily, but I'm just gonna go start at the Corona period and try it from there on out. So I'll go from here to, I think, the highest point. Yeah, the highest point being, yeah, to here. So I guess you get something like this, right? And then 2/3, and this is gonna be purely based on uh, trying stuff. Okay, I'm not really sure what I'm doing, but I'm just trying things out. And basically this is, I think, is what it would look like. So this one went on a bit too long. I'm not sure if you have to take the high, but I guess it's, wait, to the beginning to the upper line. Yeah, okay. So I guess the highest point of the peak. And maybe it's a coincidence here because, well, I manually did stuff here, but then again, there's nothing here. Might still come to that. So yeah, that's pretty cool. And you could actually do it the other way around as well, because this one is going to be in an uptrend, but in the downtrend it needs to be exact opposite. So for a downtrend, I'll actually can I just delete everything? I'll try it for a downtrend as well. So what you'll do is you take the high point and you go all the way to the end, and you will take the lowest point, right? Things like this. And what you'll do is you actually go to over 1/3, which I think is going to be about here, and the other one is going to be around here. And as you can see, it might be because it's a little bit short term, but it doesn't really indicate anything, in my opinion. It's not really. You could say touch to here, but yeah, it could just be luck as well. So I'm not really sure, but these are like sort of the speed lines. So yeah. So yeah, I had a bit of a problem with my audio, so I'm just gonna record. This is still the follow-up of the previous speed line, so it's all fine. But yeah, this is going to be about the selling climax. And basically what is this is a lot of volume on a single day, and the prices actually being sharply higher or sharply lower um, based off of the previous bar thingy, right? So this most of the time indicates a reversal, and I think another name for this is probably going to be a fake out. So pretending to go down, having a really rough time here, and actually going up. And then the moment where it ended, the fake out, is most of the time also a great indicator of a support line. I haven't really looked it up, but I'm guessing this one is how it's supposed to work. I'll look at the Bitcoin chart and actually see if I can find something. So, this one actually a bit messy, so I'll just take this one. So let me just look where there's a lot of volume. And I'm hoping actually to see like a price reverse pattern, but just me looking for something really. I guess this is a good example, but well, it did have a high price pattern at the top here as well because it rose 17% in the day, which is a shit ton. Went down, right? So this is probably going to be a fake out, and you might think, oh yeah, it's going to go down, and indeed it did. But this one is a fake out as well, and it went up all the way to 33% positive. So yeah, I'm not sure what to make of it. It's there. Haven't really used it, actually not at all. So yeah, that's something to I guess keep in mind. I haven't really seen it yet, but I guess if you really want to see it, you'll see something yourself. So let's move over to the different types of gaps. So these happen actually definitely not in crypto because they're all day around, but mainly in normal stocks or like stocks, because you have it closes for me at least, it opens at I believe it's like 4 and closes at I think it's like 9 or 10 in the evening, but I think it's open for like 8 hours a single day or 7. I'm not sure. I think it's 8. But yeah, and of course the weekends also create a really big gap, but a lot of people buy and sell at those time, especially I think it was a theory that a lot of the sort of dads and parents who don't have time during the weekdays actually go look at their wallets in on the weekends and see, oh, it's a lot of green stuff, so I might as well sell, and then having an extremely great sort of bad day on Monday. I think that's one of the days why Monday is lower than like average stock pricing. But that's just a theory, and I'm not really sure what's based on or anything like that. But yeah, the different kinds of gaps. Basically, well, you'll have the first one is an exhaustion gap. This is most of the time near the end of the rally, and might seem really good because the price is jumping, right? Well, it's probably nearing the end. Then next up you have a measuring gap, and these ones most of the time happen at half of the downtrend, sort of. So as you can see, of course he also took the best pictures he could find, but you'll see it's a downtrend, and almost the same amount it went down again after the measuring gap. And then you have the exhaustion gap again, which is basically going to be a trend reversal at the same time, because this is going to be a rally and this is a rally on its own, right? I haven't really looked for this. I can look at it meta because I know they have a lot of gaps in here. And yeah, let me see. So I think you could call this the exhaustion gap. I'm not sure if you can call this the measuring gap. Probably not, because there's still went a lot down. Maybe, yeah, I don't want to say this one because that's really bad for meta. So I'll just keep it on this one for now, even though it's not it's an uptrend. No, again, it's a bad one. So let's say I take this one, and it is about this way, right? It would mean it'd have to go down this way. It's lower, so I'm not sure, but there's a lot of gap here. It's close, or even actually, sorry, let me just see there. So yeah, that could be it, but let me just look at another example. Maybe I can find something. And this is actually a great example of the next thing I want to show, because you can see right here, this is an island on its own. So the price opened here, or closed here, and it opened here. So that's actually a significant difference. And this, you can compare this to water. And the same thing happened here. You'll see here's the selling price, and here it opened. So there's a lot of gap here. But the same thing happened here, because here it closed, right? And here it opened. So there's a lot of water here. And this is basically an island. Most of the time signals a reversal pattern. In Meta's case, actually went on for quite a bit. And as you can see, they have quite a lot of islands going on. I actually did not see it before, but they have quite a lot of islands going on. which is funny to see because I just read it. So yeah, that's another thing. Where are the prices here? Yeah, and then yeah, this was about the island, basically meaning an up gap and a bottom gap, indicating an island, and islands indicating a reversal pattern. And there's actually one more thing, which is I think is like the second main thing in the chapter 4, which is going to be about round numbers. So basically, what they mean is human psychology is basically everything that's happening in the trend. People buy and sell, or panic sell, or like there's a lot of stuff happening, but it's all humans, right? So what I've put up a few key notes, and basically meaning the psychological round numbers, because those are a barrier for us. I'm not really sure if this is a good example, but I don't like to see the volume bar of my remote for the TV going at like sitting at like 14. You know, just it needs to be even numbers or like the complete tens and twenties. Those are the best, right? So yeah, I'll just try to look at it from here. So I'll just start at the bottom, and here I especially mentioned to 400, marking a great round number for the gold price, and he did this a while back at writing. So I think he refers to these parts because I think he wrote the book at like the first part of the book in like 93. So yeah, I'm guessing it's here. But yeah, a lot of psychological trend lines, and especially in gold because it's such a slow moving market. But you can actually see this back at, yeah, what do we want? Meta again, I guess. And if you look at some of the highs, most of the time they're either going to be spot on or really close to a round number. And now that I'm looking at Meta, I don't really see a clear reference to round numbers, to be honest. It might be a bad example. Let's look at S&P. Being at 3400, this one going at 2200. So I'm just looking at the lines here. Could just as well be a coincidence that it's sitting at 3200 and 3600. And here, as of now, yeah, not really seeing anything. Last one being 48 and 46, but not really seeing any significant round patterns. But yeah, this should be a thing which the humans really look at and actually really value. So yeah, that's it for this video. Thank you.